Boost your Irish state pension by working abroad. Here's how. Have you ever thought about how working abroad could actually enhance your Irish state pension? While there's plenty of information out there about making voluntary contributions to the UK pension system, there's a crucial aspect that often gets overlooked. What if you don't currently qualify for an Irish state contributory pension? If you're at risk of falling short of the minimum 520 contributions needed by the time you hit 66, or even 70 with the new rules, this is something you need to pay attention to. For those who might never meet the minimum requirements for an Irish state pension, it's worth noting that any income you receive from a UK pension could impact your eligibility for an Irish non-contributory pension. In such cases, purchasing UK voluntary credits might not provide the benefits you expect. Now, let's dive into the heart of the matter. Recently, there's been a lot of buzz about buying back entitlement to a UK pension, especially with a deadline looming. But for many, the pressing concern is how to fill the gaps in their Irish state pension. The good news is that the Irish pension system is undergoing a transition that will simplify things. Once this transition is complete, securing a full pension will require 40 years of PRSI contributions, which translates to 2,080 weekly stamps. If you fall short of this number, you'll receive a pro-rata pension based on how many contributions you have. For instance, if you've accumulated 1,600 paid and credited contributions throughout your career, you'll have 76.9% of the required contributions for a full pension. With the current pension rate of €289.30, you'd receive a weekly payment of €222.47, which is 76.9% of the full amount. In the past, the system used yearly averaging, where your total PRSI payments were divided by the number of years you worked. If the result was 48 or higher, you'd qualify for the full pension. However, if you started working early, you could end up with more than 40 years of contributions but still not receive a full pension. Regardless of the system, you need a minimum of 10 years of contributions, 520 stamps, to be eligible for any pension. During the ongoing transition until 2034, the authorities will compare your total contributions with a blended approach to determine which yields a better outcome for you. Now, what if you're still short of that magic 2,080 but have worked in other countries? The answer depends on where you've been employed. If you've worked in an EU or EEA country, your social insurance contributions can be added to your Irish record, potentially boosting your pension. For work done in countries like the UK, US, Canada, Australia, New Zealand, Japan, or South Korea, Ireland has bilateral agreements that allow your social insurance payments from those countries to enhance your Irish record using a specific pro-rata formula. Here's how it works. First, they calculate a notional pension, which is what your pension would look like if all your contributions, both Irish and non-Irish, were treated equally. You simply add up all your social insurance contributions from Ireland and, say, the UK, and divide that total by the number of years you've worked to get a yearly average. If that average is 48 or above, your notional pension is the full €289.30. If it's lower, the rate decreases in bands. But that's just the beginning. You then apply the formula, AXB/C, where A is your notional pension rate, B is your reckonable Irish contributions, and C is the total contributions from both countries. For example, if you have 1,200 Irish PRSI stamps and 416 from 8 years in the UK over a 39-year career, you'd first calculate your notional pension rate. Adding 1,200 and 416 gives you 1,616, which you divide by 39, resulting in an average of 41.4, rounded to 42. This equates to a notional pension of €283.70. Next, you multiply this notional rate by your 1,200 Irish contributions and divide by the total of 1,616 stamps. This gives you a final pension amount of €210.70. Interestingly, if you had only relied on your 1,200 Irish stamps, your yearly average would have been just over 30, resulting in a lower pension payment of €260.10. Since the pro-rata calculation yields a better outcome, that's the amount you'll receive. The fewer Irish stamps you have, the more beneficial the pro-rata formula can be for you. Now, let's address your second point. If you're counting on the non-contributory state pension due to insufficient PRSI stamps, be aware that this will be subject to a means test, which generally includes all your cash income. However, there are exceptions. Payments from the Department of Social Protection and certain social welfare payments from other EU member states, including the UK, are typically exempt from this means test. This suggests that your UK state pension income might not be factored into the means test. However, the EU regulation that governs this exemption, Regulation 883 of 2004, also has stipulations regarding overlapping payments, which can complicate matters. If you have any questions or need further clarification, feel free to reach out. This information is meant to guide you, but it's always a good idea to seek professional advice tailored to your specific situation.